Okay, students, आज फिर आ गया हूँ. Today we are going to discuss sample paper of account O-level accounts 7707. Yesterday we did MCQs paper 1 sample paper of 7707. Today we will do the paper 2. So here's your paper. This is the sample paper, and first you have to make a cash book. Here is your cash book. So how are we going to use it? See, now when we are making cash book in question number 1, it says Shahid is a trader. He maintains the full set of accounting records with 3-column cash book. On 1st August, Shahid had the following balances in cash book: cash $50 and bank overdraw 715. So in this case, what we'll do, we have to write here 2017 and here 2017. Now this is 1st August. August 1st. Balance reading for cash 50. And August 1, balance reading for bank is overdraft. It means it should be on the credit side. It should be on the credit side. This is when it says balance is overdrawn, it means we have to show the credit balance of bank. 7,150. 7,000. Now, Shahid, transaction for August include the following. August 9, check received in July 362 from EN supply was dishonored by bank. So here we'll write 9. Okay. Check of EN supplies. EN supplies. And it's going to be credited from bank because it is a dishonored check. And the amount of check was 362. Done. Okay. Now paid $154 by check for fuel of private motors. So that is going to drawings. 18. Using drawings. Amount is $54. Now, next, receive check from Mariam to settle her debt of 520, less 2.5% of cash discount. Now, in this case, we are receiving cash. We are receiving check from. Sorry, we are receiving check on this date, and the date is 24. 24. You see the check, I think the name is Mariam. Mariam. Okay, check. Now, in this case, what she did, she got a discount out of 520. So now 520 multiplied by 2.5%. Discount is $13 and the amount is 507. Going to be deposit in bank. 507. Okay. Next is paid 400 by check, include 365 and new office equipment, and the balance was for repairs to existing office equipment. Okay. Now 365 for office equipment, that is on 2027. 27. We write over here office equipment. Amount is 365 and the same date 27 is repair expense. Repairs expense 35. Total 400 payment was made, 365 office equipment, 35 for repairs. Okay. Cash sales 3224. So we received cash on which date? 30. We received cash. Reason is sales and the amount is 3,224. Okay. On 31st paid all the remaining cash into the bank except 100. So total cash we have is 3224 plus 50, 3274 minus 100. The 3174 cash has been transferred to bank on 31st. 31st. Cash is deposited into bank. Sorry. Cash is deposited into bank. How much? 3,174. Yes. Done. This requires a C entry. So what we are going to write here is a C. A C entry. And here we write in the bank 3,174 on 31st August. 31st August, cash is deposited. It also requires a C entry. Done. Now, how much is left? This is the end of August or 31st August. We know that only balance brought down on 31st August is balance CD is how much? 100. We know that because 100 is left only. And what about bank? We have to calculate. Now in bank, we have 7150 overdrawn, plus 362 gone, plus 54 gone, plus 365 gone, plus 35 gone. Total 796 is gone. Okay. Minus 507 minus 3174. The answer is 4285. The answer is 4285 balance CD in the bank on 31st August. How much balance CD? That was 4285. 4285 August 31st. Balance. again overdraft. Now what we have to do? We have to take totals over here. Now discount allowed, the total is 13. Cash total is 3224 plus 50, 3274. 3274. Okay, what about bank? Total is 507 plus 3174 plus 4285 7966. 7966. Okay, discount receipt, we have nothing. Okay. In cash, we have 3,274, and in bank, we have 7,966 totals on this side. Now, this is the responsibility of a student to bring down the balance on September 1st. Balance brought down. Should record September 1. Balance brought down. We know in cash we have already. Okay. On the same day, in bank, we have a balance waiting. How much? Bank 4,285. This is the complete cash. And you have to write balance brought down at the start of the new month. Please don't forget. Okay, so this is our first cash flow. Question number 1 we did. Achha. Now we have to move for question number 2. Now, after question number 1A, we'll move to question number B. 1B. Statement account Shahid, 44 Narrow Lane, anytime. Okay. Now, in this question, Mariam is the buyer and Shahid is the seller. So, state the business document and the book of prime entry Shahid would use to record the following transaction appear on the bank on the statement of account: goods, document, sales invoice. And book of prime entry, obviously sales day book or sales journal, whatever you want to write. Sales journal. Credit note, because Shahid is going to issue credit note for the returns and he is going to record in sales returns. Sales returns. Done. We have a guide for months. Now move to 1C. Prepare the account of Shahid that would appear in the ledger of budget. The account is always made in the question. I'm getting my point clear. The account is always is made in the question. The year is 2017. Okay. On August 1, balance brought down $520. Account is almost made, but just you have to take out the closing balance. Actually. Now, purchase goods on August 9. August 9. Here we'll write purchases. The amount is how much? 340. Now, August 13. Thank you. Purchase returns. Amount is 24. We have paid to Shahid by bank, by check or bank, whatever you call, 507. And on the same date, we have discount received, that discount discount $13. Now what is the total? What do you have to write over here? On 31st August, you have to write balance CD here. So 520 plus 340, 860 minus 24 minus 527 minus 316 is balance CD. 316. Then what you have to write over here? The totals. What we do? We will keep. Okay, and the amount is how much? 860. What the size? Now, don't forget to write September 1 balance period. The liability account should show the trade balance 360 and get full balance. Yasmin opened a garment factory on 1st May 2016. She provided the following information. Okay, first May cost of machinery, factory machine, cost of office furniture equipment, cost of tools. For the year ended 30th April, revenue, purchase of raw material, finished goods, wages and salaries, factory operatives, factory supervisor, official general expenses, rates, inventory of raw material, work in progress, finished goods, value of tools, wages accrued, factory operatives for 800, office and sales staff 950. No additional current assets were purchased during the year. Okay. Factory machines to be depreciated 20% of per annum cost. Office equipment is to be depreciated per 15% cost. And tools are to be valued at the end of each financial year. Done. Okay. We have no arguments. Now we have to make manufacturing account. Okay. Manufacturing account starts with work in process. Work in process. Opening. Or you can write first May 2000. That must be given in the question. No. Sorry, I forgot because she has started the working. Okay, so we will start with the heading prime cost. Now raw materials. Raw materials. No, first you have to write that. And direct materials, what we do, we will write purchase of raw materials. There is no opening inventory of purchase of raw materials because we started the business. Okay, materials. Material is given here, and that is 30,000. What we have to add over here. Purchase of finished goods, wages, salaries, general expenses, rates. Yes, raw materials we do not have. We are not given actually what you call carriage or something. So just there is no purchase returns of raw material available given in the question. So what we have to do, we have to write less materials that is very much given over here, and we have to write in bracket. This is 3,150. 3,150. And then we put a line over here, and we will include direct materials in this. So this is direct material. Direct material is how much? 30,000 minus 3150, 26,950. Yes, 26,950. Then we will have direct labor. Direct labor. Now, direct labor includes only the wages of the factory operative. Wages of factory operators. Wages of factory operative is given how much? Wages of factory 31,500. And what we have to do? We have to add over here accrued wages or accrued wages of factory operators. This is how much? 800. After adding this, we get the direct labor over here. Direct labor is how much? 31,500 plus 800, 32,300. Okay. Now what we have to do? We have to add materials and labor, and we get the prime cost over here. Now this is our prime cost. Prime cost. Now for prime cost at 26,950 plus 32,300, the total prime cost would be 59,000. Okay. Now heading factory overhead. So heading factory overheads. Now in factory overheads, we'll write all the expenses of factory, no other expenses. Okay. Now come to factory expenses. General expenses of factory 3240. Expenses. Factory. How much? That is 3,250. Done. Okay. Second. Factory supervisor salary, wages of factory supervisors. This is indirect cost. It is very much given here with the wages 11,860. 11,867. Okay. Then we have general expenses and the factory rates 4,000 rates 4,000. Now we have depreciation. Now we'll write depreciation as heading because we have to take two depreciations. Depreciations. Number one, tools. It's very simple. The value of tools at the start of the year is 1,000, and at the end of the year, value of tools is 830. So 1,000 minus 830. 1,000 minus 830. The answer is 170. The depreciation of those tools. 170. And what about other factory machinery? Factory machinery. Now factory machinery You have to depreciate 20% on cost. It's very easy. The cost of factory machine is 35,000. 35,000 multiplied by 20%. And so we have 1, 2, 3, 4, 5 expenses. Yes. 5 factory overheads. So what we have to do? We have to add all factory overheads. 3240 plus 11,860 plus 4,500 plus 170 plus 70. So 26,770 is your total factory overhead. 26,770. Okay. This is your total factory overhead. Write it over here. Now we'll get it. We'll get here total manufacturing cost PMC. How much? We'll add here prime cost and overhead. Prime cost 59,250 plus 26,770. Answer is 86,000. 86,000. 0 is the manufacturing cost. Now, what you have to do after this manufacturing cost? What else we have to do? We have to less work in progress closing inventory. We have to less work in progress closing inventory. Less. Closing inventory. So that would be it. That was given. We'll write in bracket. How much? 2,820. 2,820. Write it in bracket. So remember that we have to add. And what we get here, this is the end of statement, and we will write the amount as well as this is the cost of goods. Zero minus 2,820. Answer is 83,200. This is your cost of production. Manufacturing account is complete. Okay. Now, come to the next question. Yasmin is hoping to decrease her cost of production in the future. She thinks that if she spends a further 20% on factory machinery, she will be able to reduce the cost of direct labor by 1/3. Advise Yasmin whether or not she should buy the extra factory machines. She can answer the 2 advantages and 2 disadvantages of your advice. Achha. Now, if what do you think? If Yasmin is going to replace 1/3 of the direct labor, so if you calculate 1/3 of the direct labor, it would be direct labor is how much? 32,000. She can save $10,000. Okay. She can save $10,000. But she has to spend $25,000 just to save $10,000. Getting my point here. The advantage is using machines, output, the productivity will increase. She can save her time and cost. On the other hand, she can only, but she has to spend 15,000 more, and redundancy will act. So in this situation, terminating labor from the job is not good. So I don't think so that she should take this. Something is wrong. Now, C part. Calculate the cost of sales for the year ended 31st. Oh, it's very easy. Now, because she has started her business, so cost of production, COP, I'll call it. Cost of production is how much we have calculated. How much we have calculated cost of production. Cost of production we have calculated in the previous section. Now, yeah, what we like 83,200 cost of production. Okay, what she has done. She has purchased finished goods also. Purchase goods. That's how much? 2,700. 2,700. So altogether, what's the cost of goods available for sale? What we write over here? Cost of goods available for sale. Cost of goods available is how much? 3,200 plus 15,700. The answer is 98,000. And what we have to do, we have to less here. Finished goods closing inventory. Finished goods closing inventory is very much given there. 6,800. 6,800. Write it in the bracket so we remember we have to deduct it. And after this, what we get here is what is 98,900 minus 6,800, 92,000. Okay, now calculate the gross profit. Take the revenues. Revenues are very much given in the question. 113,640. 113,640 is the revenues less cost of sales. 92,100. Right in the bracket, 92,100. And the answer is yes. GP, gross profit, how much? Right over here, minus 113,640, 21,540. It's your getting done. Okay. Now come to the next question. Suggest one way could increase the percentage of gross profit to revenue. I think increasing controlling. Okay. So this is it for today. Inshallah, we'll continue with this paper. Tomorrow we'll finish it, inshallah. If you have any suggestions, anything you want me to do for you, I'm available. And please kindly subscribe my channel to support me. Okay, thank you. Take care. Allah Hafiz.